Good afternoon, everyone. I'm David Talbot, Managing Director and Head of Research here at Red Cloud Securities. And I would like to thank Pear Tree for sponsoring this session. Aris Gold will be the next company to present to the audience. So I introduced everyone to Andrew Gubbels. He's Senior VP Corporate Development of the company. Now, Aris Gold is transforming the historic Marmato gold mine in Colombia and has exploration projects elsewhere in Colombia and Canada. So Andrew, you will have 10 minutes and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask any questions you have using the Q&A link. So go ahead, Andrew.
Thank you, David. Hello, everyone. Okay. Aris Gold is a relatively new company, having launched in February of this year. And for those who don't know us, we're led by an executive team and board with a track record of building successful globally relevant mining companies, including Leagold Mining, Endeavour Mining, Gold Corp, Wheaton River, and Yamana Gold. And we're starting our journey to build our next major company with an initial asset in Colombia that, upon expansion, will become a cornerstone asset within our portfolio. Our strategy this time around hasn't changed, although we've learned a lot of lessons along the way. We'll create value by adding scale and diversification, optimizing and advancing the assets within our company, and investing in exploration and actively managing the portfolio as we grow. Following the discovery of a large porphyry mineralized zone below the historic Marmato mine in Colombia, we do plan to build a modern long life mine capable of producing 175,000 ounces of gold per year. With a 30-year operating history, Marmato has an established social license in a secure and mining-friendly region of Colombia. Initial feasibility work is complete, funding has been raised, and the major permits are in place. We're now actively working to modernize the current operations and are moving forward with detailed engineering of the expansion project. With strong community support, Marmato will become, in our minds, the next major gold mine development built in Colombia. Now, the Marmato mine is made up of two distinct mineralized areas, really delineated by an upper mine and a lower mine. The existing upper mine is located between 950 and 1,300 meters above sea level. It's characterized by narrow vein mineralization, where cut and fill mining methods are deployed. We're producing currently around 24,000 ounces of gold per year from this mine, and importantly are undergoing a comprehensive performance optimization program to upgrade what's traditionally been a labor-intensive and undercapitalized operation. In contrast, the new lower mine expansion, which exhibits wide porphyry mineralization below 950 meters of elevation, is suitable for mechanized long-hole stoping mining methods. As we advance towards construction, we also continue to see resource growth potential from ongoing exploration drilling at Marmato. We estimate approximately $270 million of capital will be spent on developing the expansion project, where we will build a new dedicated decline to access the mine workings, a new 4,000 ton per day carbon and pulp plant, dry stack tailing facilities, and a new project camp. Marmato in general is supported by excellent infrastructure with access to the Pan American Highway, the Coca River, and the national energy grid. Now, to upgrade the current upper mine operations, we prioritize a number of key initiatives. First, we put in place an experienced senior operating team with trusted mine GMs with a history at Leagold and Endeavour. And they're now leading the in-country team. We're actively investing in plant upgrades, refurbishing the underground mining equipment, and instituting the preventative maintenance programs to improve plant capacity and milling rates. To address excessive dilution at the mine, we've implemented 3D mine planning and modeling, which will substantially improve grade control. A workforce rationalization program is also ongoing, which includes a new shift schedule whereby workers will be incentivized to relocate to the site camp in Marmato, thereby reducing absenteeism. We're also introducing new cost management programs, including an ERP system to better control purchasing and procurement. Finally, we've been implementing upgrades to the tailings storage facility to meet Canada Dam Association safety guidelines. As a result, we aim to achieve increased productivity, higher production, reduced operating costs, and an overall improvement in the health and safety at the Marmato mine. We've also made great progress advancing the lower mine expansion project towards construction. After feasibility study was completed late last year, we've hired a new experienced project manager to lead the development team. We've retained Wood Group as our EPCM contractor and have submitted an amended environmental management plan to the regional governing authority, Corp. Going forward, we'll complete our 35,000 meter post-PFS drill program, which is really we're through the on-field work and reviewing assays, provide an updated mineral resource estimate, complete the final mine plan and optimization studies, incorporating the updated resource, and complete final engineering and design of the project, all with the aim of starting construction of the project by the beginning of next year. Now, upon development, the expanded Marmato mine will have all the characteristics that will become a core mine in our portfolio. A 2 million ounce reserve and plenty of upside in a 6.3 million ounce resource to extend the mine life beyond the 13 years in the PFS. Production that will exceed 200,000 ounces of gold in the first 2 years of production post a lower mine ramp up, then average 175,000 ounces per year for the remaining life of mine. Low operating costs and low capital intensity given the proximity to the existing upper mine. The resource growth potential at Marmato is also important to emphasize. Pre-PFS drilling was cut off at a 2 million ounce reserve once it was defined in early 2020. And since then, the 35,000 meter program has continued to demonstrate high-grade mineralization over broad widths, suggesting potential to further improve the mine plan and extend the mine life. Recently, we've also discovered continuity of high-grade mineralization at depth below the current bottom of the indicated resource that's below 500 meters of elevation. As referred to previously, we're working to provide an update on the mineral resources later this year ahead of construction of the lower mine expansion project. Now, our second asset is the Juby-exploration project in Canada's active Abitibi Greenstone Belt. Juby is located along the same mineralized trend as Aris Gold's Cote Lake deposit and approximately 70 kilometers from Alamos's Young-Davidson mine. The initial 2.3 million ounce pit-constrained resource was estimated based on historic drilling on the property. Following the recommendations in the October 2020 mineral resource estimate, we have already initiated a 10,000 meter drill program, which recently completed the on-field work, to better understand the deposit's potential. We expect the assay results back from the lab in the fourth quarter or later this year, and we'll evaluate further exploration on site at that stage. So a little more detail on where the exploration is happening. The objective of the program is really to continue the drilling along strike between the known Golden Lake and Big Dome deposits, where there's traditionally been a gap in the data. This is the first proprietary drilling that's been on site since Pan American owned the asset in 2018. We're also testing a few other high-grade areas that are outside the current resource. I'll quickly touch on the capital structure, which different from many companies with major developments. We do have a strong financial position with $170 million of cash already on the balance sheet, another $76 million of committed funds from Wheaton Precious Metals, for a total of $246 million of cash available for growth. That's before accounting for the fact that we've got a productive mine in the upper mine producing gold. Our shareholders are very supportive of the strategy. Board and management own 8.5% of the company. Grain Colombia remains our largest shareholder at 44.3% of the shares outstanding. They've committed to vote in line with management and board and not sell without approval while they hold over 20% for a period of 2 years. We also expect our free float and liquidity to improve as we continue to build out the Aris Gold portfolio through M&A. I'd like to quickly also touch on our focus on sustainability and ESG. We're really building on a strong and healthy social license to operate in Colombia. We hope to nurture and further enhance the local relationships as the company grows. This all started with new corporate policies when Aris Gold took over the team in February, and continue with the publication of our inaugural sustainability report in August, which demonstrates our commitment to transparency. Going forward, we committed to a minimum $25 an ounce social investment fund at Marmato, give back to our communities, and also established health and safety, environmental ethics management systems in order to track key data and identify areas for improvement in the future. Finally, I'll just re-emphasize the strength and experience of our team, given that's a key characteristic of the company. With Neil Woodyer as our CEO, we have much of the same management operating team that created and built Layer Gold and Endeavour Mining. You already know many of the industry leaders on our independent board of directors, including Ian Telfer, a former chairman of Gold Corp as our chairman, Peter Maroney, executive chairman of Yamana Gold, and David Garofalo as a former CEO of Gold Corp and Hudbay, also on the board. And we also have good representation from Grain Colombia and Serafino Econo and Hernan Martinez, with very good Colombian exposure as well. The board supported by Frank Giustra as a strategic advisor to the company. So I'll just end off with a few points of why invest in Aris Gold. I've already mentioned the leadership team. That leadership team is personally invested in the company, very much aligned with shareholders. We're transforming a historic mine in Colombia that will become a cornerstone asset as our first investment. We see great exploration upside in Colombia and Canada. We have a strong financial position with $246 million of cash on the balance sheet, future cash flow from operations, and we believe a unique access to funding to grow the company going forward. We're building on an established social license to operate in Colombia, and we're grounded in good governance and responsible mining practices to move forward. And lastly, what I'll leave you with is a combined market capitalization of Endeavour Mining and Equinox Gold, previously Layer Gold, two companies this management team founded or part of founding, is approximately Canadian $10 billion. Starting with Marmato and Juby, Aris Gold is well on its way to building another globally relevant gold producer. I'll pause there.
Okay, thank you very much, Andrew. Great presentation. So we just have a couple minutes, so maybe, looks like a solid, long life, low cost production outlook here. Can you discuss what your Marmato mine expansion budget might be and what is required to get to the new production rate?
Yeah, happy to do that. So as of now, the forecast for the expansion CapEx is for the feasibility study. We have our EPCM contractor engaged in Wood on site. We're also working with SRK, who's doing some of the work around the resource update. Real time, we're working on what the budget will be, what the final capital numbers will be. We do have some flexibility with respect to how the development plays out, from respect to potentially leasing some equipment, looking at mining contractors as well, before we decide what that final number will be. There has been increased sustaining capital in the upper mine as we go through the optimization program, but we're confident we'll get to a place where there will be some cash flow contribution from that upper mine as we develop the lower mine project to fill potentially some of that funding gap. So we don't have a definitive update on what that number will be right at the moment, David, but through the back half of this year, going into December, we should have all those numbers updated and available.
Okay, and maybe just to wrap up, 240 million, requirement here. How do you expect to finance this project?
Yeah, yeah. So one of the real selling features of this investment, and rash reasons why we got into it, was the fact that Caldas had done a good job of raising some capital already, $110 million stream from Wheaton, as well as $84 million in gold-linked notes. We saw the opportunity to invest in a private placement ahead of us coming involved as management, $85 million Canadian back in end of November last year. That really rounded out the funding required for the mine. So we do have access to that cash either on the balance sheet or pledged from Wheaton as we develop the project. So we do see this project as substantially funded. And as I mentioned, we do have the benefit of having that productive, future productive upper mine as we go through the optimization, which should contribute cash flows as well.
Okay, well, thank you very much. We'll leave it there. Thank you everyone for joining us. Just to note, we do have a 30-minute break right now, and then up next at 2:45 is South Atlantic Gold. Thank you very much.